Today is about you and how we can save tax for your company. Whenever I get a new client, there's certain things that I run through them. It's almost like a financial health assessment that I do with all our clients. So one of the very first things that I would discuss with the new, at least assess with the new client, is the status of a small business corporation. So just some ideas and some requirements around small business corporation. But to be a business corporation, it's not something apart from a company or closed corporation. It's something that can be implemented or be activated on your tax return when you submit your income tax return for either a private company or your closed corporation. So those are two um, entities that you can use for a small business corporation. So it's not a separate registration. It's almost as a click on the income tax return. And very importantly, now I will show you the calculations and the actual tax difference between a small business corporation as such and in a company or the normal corporate income tax rate that's at 28%. So, but before we get to the calculation, let's just go through the actual requirements that you need to be able to be a small business corporation, or at least your company. So your turnover needs to be less than 20 million rand per annum. That's very important. And then none of the shareholders or members in case of a CC um, may hold any other shares in any other company or CC, obviously an active company. Um, and they must be all individuals. So you can't have a company that or like maybe say the other way around. You can't have a trust that holds the shares in your company. Obviously, for estate duty and all other risk kind of reasons, you need to be an individual holding the shares, and you may not have any other shares in any other company. And any other company means a private company or closed corporation. It's not a listed company. So if you hold any listed shares like JSE shares, those kind of things, you can still qualify at least your business, your company or your closed corporation can still qualify for a small business corporation. Um, there's only two exceptions on this rule, and that is if you are a director or shareholder or member of another company, um, and that company is actually dormant with assets less than 5,000 rand, then you can still the company can still be classified as a small business corporation. And also, if you have a company that's currently in the process of deregistration or in the process of winding down, like a liquidation, etc., then you can also still be a small business corporation. So I think those are the two very important points. And then the third point is also very important. You might not the company's income might not be more than 20% in the form of investment income or personal services. And I think that's very important. And also personal services is very important to understand that it can be anything like accounting, auditing, or architect, IT services, um, uh, company that trade in property, whether it's rental income or trading in flipping, buying and flipping property. All of them are personal services or investment income. So there's quite a number of exclusions. And but there is luckily, and I haven't included on the slide, but it's very important that if you are a company and your income, more than 20% of your income comes from personal services, if you employ more than three non-connected parties, so it can't be your wife or your husband or your brother or sister, um, or kids, or even a bit further to that, very closely related family members. Um, if you employ more than three or more of these non-connected parties, then you can still be a small business corporation, even though this may be applicable for the personal services. So very important to that as well. So thank you very much. I see there's a few more people watching. Like I said in the beginning, please, if there's any questions, I'm going to have Q&A at the end as well. So I'm going to run through a few ideas, and then I'll be getting back to you, and we can have a nice discussion on the Q&A as well. So now that we established that you potentially can be a small business corporation, let's go look at the actual tax calculation and the tax advantage. I think that's the most important part of this, because today's topic is less tax.
Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift pack voucher in the link below, and we will be in contact with you as soon as you've done that.
So let's quickly look at the company of this morning. Actually, done it. Let me just open it quickly for us here. So this morning I've opened up just a small business corporation, Pty Limited, with all kinds of turnover, which we can see here is less than 20 million, it's 12 million. So that's the very first idea, or the very first requirement. And then the shareholders, like I mentioned, don't have any interest in any other private companies. And then I've done a calculation for us based on the taxable income. So this company's taxable income for February 2020 was 354,000 Rand. And if you were, if you didn't qualify for a small business corporation, then your tax would actually be almost 100,000 Rand, 28% of the taxable income of 354,000. But in this case, because we could, all the requirements has been met, and it's actually a small business corporation, the tax levels are a lot lower. So it's actually up to the first 78,000 Rand, there's no tax. The first 78,000 net profit, there's no tax. And then up to 315,000 Rand, it's only 7%. And then to a scale of 550,000, which is the highest scale, you only pay 21%. So anything above that, you will actually pay 28%. So that makes a massive difference in the tax. So you will see on right here, income tax at the small business corporation tax is 19,000 Rand, and the normal corporate tax would have been 99,000 Rand. So the income tax saving is almost 80,000 Rand, just merely because you could verify that you're a small business corporation, and you could, in truth, obviously, confirm that on your income tax return. So this is something I really do with each and every client. The very first meeting that we have, that's almost the very first thing I do if they're a company or a closed corporation. I assess that part, because that is very important, and to make sure that the client pay obviously as little as possible income tax. So I'll just write here as well, the savings is applicable to 550, so that's the highest scale. Anything above 550 would be taxed at 28% of the net profit. Just also a very important point on this is the net profit calculated here is after the director or the member actually receive the salary as well. So this is after everything. So after this tax, if the director want to distribute the dividend or additional bonus, then you can potentially look at obviously declaring it after this tax. But the director actually received the salary already from this, so it's already been deducted from this income tax. I just want to see if there's anything else on there. This is only the calculation. Yeah, right. So that is basically it regarding small business corporation.